Hello, 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 everyone, and thanks for tuning in, and happy Friday. It's that time of the week. We're your hosts, Herwig and Kyle, and we are bringing you the latest and greatest news in RWAs and security tokens, as we've been doing for over 5 years straight. Woo. So we're not stopping anytime soon, Kyle, and because of that, we do have to ask, especially if you're a fan, do take a moment, please like, subscribe, share what we got going on here with the show so that we can keep growing and making sure we bring you the best possible show every single week. But Kyle, how are you this week, my friend?
Herwig, I'm feeling great. We are seeing everything in the industry just continuing to grow. We're seeing things flourishing. Crypto is starting to come back again. And we have some really good institutional adoption points coming throughout this article and throughout all these different pieces we got covered here on the show, Herwig. So I'm pretty excited to go.
Well, we have no interviews this week, so nothing but just good old updates and maybe a little gossip from your boys over here. So why don't we get started with the market movements and see what's happening in the space?
Let's dive right in.
Kyle, we've long been talking about tokenized treasuries as the hot new category, but I think we've been the only really individuals that have been trying to sort of put out to the industry that not everything is a tokenized treasury. In fact, what we most commonly see in traditional markets is the concept of money market funds, which certainly leverage treasuries, but they leverage all kinds of other similar cash and cash equivalent products to manage that liquid money market fund, offering you that yield. So, this is no surprise that this week, Kyle, we have 3, maybe even 4 updates here on tokenized money market funds. So, I soon think that this will be replacing this concept of tokenized treasuries as the world of finance sort of embraces that term more so. And I think we're going to keep seeing more and more institutional type of players enter, right? BlackRock's Bitpanda product has been dominating this category, if you will, with over $500 million, already in assets under management. But now State Street, which has over $4 trillion in AUM, they're up there in the BlackRock league, if you will. They're planning to launch a tokenized money market fund. We know they tapped into Swiss-based Taurus recently to help them on the tech side. So we know that, that's probably going to be underpinning this. But they're going to continue to also go into the foray of crypto ETFs with Galaxy Digital. They're planning to use tokenization, they say, to allow for bonds and money market funds to be used for collateral and settlement, all the same things that we've been seeing preached by Bitpanda. But now we've got another big asset manager ready to offer an alternative. And speaking of big asset managers, Kyle, there's another one, Fidelity. That's also getting into the tokenized money market fund. But here's the interesting part, Kyle. I wonder if you have a take on this. But of course, this was revealed by the SEC filing by Fidelity regarding this tokenized money market fund. And specifically, they point out that there is not necessarily a blockchain to begin with at the start. They're leveraging JPM's Onyx. Maybe that has a clue. Kyle, how do you read this one?
Yeah, this is really interesting. I mean, you covered some good things here, both from State Street and from Fidelity using JP Morgan's Onyx. I think that we saw earlier this year, stablecoins represented a top 20 owner of US government debt. And this is, I think, really going to continue to accelerate that move forward into a really large owner of government debt. We're only, I would say, $50 to $100 billion away from surpassing the top 10. And so I think that stable coins will continue to grow, but these money market funds, these types of treasury instruments are going to be that next leg of adoption because it's just so much more scalable. It's much easier for these firms to do it. Once they've built these on-ramps and off-ramps, a lot of the hard work is then completed. And so I think, the difference between top 15, top 20, and top 5 is actually lower than you'd think. So I do think you're going to see this accelerate very quickly. To break into the top, call it, 3 to 5 is going to be difficult. Obviously, you look at Japanese and Chinese institutions own a ton of U.S. treasuries from a foreign perspective. But to get to the top 10, it's really not going to be incredibly difficult. You're probably only about $100 billion away. So there's something really, really interesting that continues to brew here, Herwig, and I do think that money markets are going to be that next leg forward.
I love how you frame that in terms of, essentially recognizing that, this is going from top 20 to top 10, and it wasn't even in the top 20, if you will, up until recently. That's awesome. I think that's once we break that top 10 category, that's when everybody says, okay, this is very real. This isn't going anywhere. And I don't think we're more than a few years away from that potentially being possible. Depends on, this continued demand for tokenized money market funds being used for settlement, for margin collateral, for treasury management, and all kinds of other purposes. That's why WisdomTree, they're also innovating in this category. They have a tokenized money fund as well. And specifically, that's the WTGXX. That's now tied to their WisdomTree Prime Visa debit card. So we talked about this, right? This is one of those cool use cases that's just going beyond just efficiencies and savings and things like that. This is a new consumer experience that's only possible thanks to tokenization, thanks to the blockchain, enabling what they're calling earn until you spend. So it's I love the way they frame that, but right, it's instead of spending money from your bank account, which is of course not making anything, your investment accounts are constantly earning. And why don't you earn until you then convert and spend as needed using that debit card? So really, really cool concept. Kyle, any sense you want to add to that?
Yeah, I think this is an interesting one. I'm hopeful that it works. I'm reminded of the Apple credit card that I just have been reading a lot of headlines that they may be terminating their partnership with Goldman Sachs. I know that credit is a really interesting and compelling use case, but I'm not sure if the retail use case has been fully and clearly defined yet. So my hope is that maybe WisdomTree, by leveraging tokenization, unlocks something new or reduces the compliance and management costs of doing something like this that a TradFi firm isn't able to. That's certainly the hope here for me significantly, but I am a little skeptical to see how this works out for them. And so again, high hopes. I'm rooting for them, obviously. But again, just on the heels of Apple, one of the biggest companies in the world, huge financial institution, enormous payment processor, has struggled to really find footing in this space. We now see Robinhood now has a card that just came out. There's certainly other upstart banks that have been trying to launch credit products as well. It will be interesting to see how this works. And, as we've talked about, Herwig, I am generally long tail skeptical on private credit as a market. So if credit cards are almost kind of a retail, aberration of the private credit market. So we'll see how that holds up over time as rates continue to change.
Yeah, I think that's where we see the classic sort of, risk curve discussions, et cetera. That's why WisdomTree probably started with a money market fund, right? The ease of the liquidity with products like that, going from earning to then cashing it out and spending it is probably a lot easier than some other products like private credit and such. But love to see it. In fact, there's even a fourth money market fund update, Kyle, where we're going over to Europe, Cassius, the servicing arm of Credit Agricole and Santander, over $3 trillion, that they're working on there in assets under management or servicing. They are also getting into the tokenized money market fund game using Ethereum, just like BITL. This is very different, of course, than JPM's Onyx, which is more of a DLT private sort of setup. And also, we don't know what they're going to do at State Street with Taurus, but we know Taurus supports Ethereum and some other chains. So interesting to see potentially what I felt like was a year ago, Kyle, where there was really no hope and support for the use of public blockchains in RWAs. Seems like everybody's now going back to Ethereum of all chains, which of course, with many of the L2s like Polygon, Avalanche, and others also helping make that possible. So really interesting to see that happen. They already, by the way, the Cassius product already has SPICO and 20 First Capital as partners into these things, and they see a future where this product could be supporting stable coins, central bank digital currencies, just as we're seeing with BIDL and these other products getting adopted already by similar players. So again, folks, I don't know if you want to have any closing thoughts on this sort of category, Kyle, but pay attention, everybody. This is the category to watch.
My final thought, and look, I'm biased, and I think that that's important to recognize. I live here in the U.S. and focus most of my time on the Western markets, but I did spend a couple months in Asia, and there was interesting conversations around dollar dominance and what that's going to mean long-term, inflation, a lot of these types of concepts. We see it all the time on Twitter with the, think boys that talk about that, that they know, macroeconomic concepts better than just post-paid engagement. But the reality is, you look at all of these institutional offerings and they're all denominated in US dollars and US treasuries. And I think that that's a really strong sign that despite the fact that there is inflation and some of these things going on, and just because there's free speech, which allows anybody to criticize anything, which in my opinion is a good thing generally, but it does show that the money in a competitive market, in a capitalist system, it goes to the products that are in the highest demand, which in this case has always and consistently been U.S.-based treasuries, and so I think that that's a strong sign that there's a healthy economy from a financial perspective.
Love to hear that, Kyle. Well, we're going to move on to some more market activity because there's a whole lot more to get into, and I'm sure many of you are like me that are excited about Happy Hour. It's Friday. It's going to be coming up later. Which is why this next one is pretty fun. Tokenizing whiskey, not the first that we've seen this, but a first from a major Bitcoin miner through their blockchain that they incubated. I'm talking about none other than Marathon, who have their Anduro blockchain that they have now basically developed a tokenization platform for called Avant that is now enabling tokenization of RWAs, in this case, a whiskey barrel project. So definitely a popular use case because we've seen the spirit of whiskey be a popular investment choice and a good one, it seems. Do your own research, just an opinion. But, it seems to be a popular use case for tokenization and access to democratization, if you will, for investors. But there's more to this, right? There's Marathon saying that they recognize RWAs are the future. They incubated this blockchain specifically to also be able to support RWAs, under what I'm seeing here is their own ecosystem, that they're kind of building through all of this, offering a one-stop shop, for people to tokenize, in this case, whiskey barrels, but I'm sure it'll be a lot more. Kyle, I don't want to go on without hearing if you had anything you wanted to add here.
I've always got a side comment. And in this case, I'm not here to dance on Marathon's grave with respect to the fact that they're down 30% year to date on their business. But I do think that this is very validating for us, Herwig, since we've been so focused on communicating to the world that tokenizing real world assets is just simply a much, much bigger market than crypto. And that doesn't mean that crypto can't exist. That doesn't mean that these are even competitive markets. Crypto represents, a lot of commodities. It also represents, potentially transactional fiat, but it doesn't represent so much of the real value in the world, which not only is so much larger from a market sizing perspective, but is much less volatile because it actually owns stuff, right? It's not about supply and demand economics all of the time. And it's not going to be quite as impacted by those things as seen by the stock market, even in a tough position, is still doing fairly well. And so in this way, great to see Marathon acknowledging that they have a significant advantage from a technological infrastructure perspective with all of their, computing power. They also have a lot of strong connections and capital connections in the tokenization space. Great to see them getting involved in the RWA industry and really trying to expand their business model, because I do think that this is the future of building a really successful company here. So I want to shout out Marathon for not just doubling and tripling and 100%ing down on a business model which may or may not work in the long term. Not to say that it won't, but I think real assets will always have long-term value. So it's a good compliment.
No, I of course, a little biased, but of course I agree. That's why I'm excited about this next update, Kyle, because it shows not just some activity around, new issuances, but actually from the other side, from the trading perspective. So not too long ago, there was the $20 million GEMS offering announced by Limitless using the Everest platform. These 20 million worth of tokens are supposedly collateralized by $600 million worth of mining, basically infrastructure and access to gems and precious metals, presumably. And in this case, the South American lithium company, Kyle, has announced that they acquired 9 million of these 20 million GEMS tokens. So that is a very successful, investor and purchase. Who knows what they're going to be doing with that? Is this an example of the mining industry evolving, and now you've got traditional players like SALCO buying tokenized access to infrastructure or gems, right? Or is this, some kind of other play in the works? Who knows? But one way or another, it's nice to see $9 million RWA trades happening. Kyle?
Yeah. That's a big trade. And it does say here that SALCO, which is that South American lithium company, they opted to financially structure part of the operation in the tokens instead of actual emeralds. So this was an emerald trade that I guess some was purchased in the actual mineral resource, and then some was purchased in this token. The terms with which the token is redeemable is unclear to me. So it's unclear if this is like an ADR or something like that, or a futures contract where you're essentially buying a token representing the diamonds and you can redeem that in the future, or it gets delivered to you in the future. Unclear on how that works, or if this more represents kind of equity in the company. Some of these things I still would want to see some of the contractual documents on, but it is interesting to see. And to your point, Herwig, I think it's really, really cool that they were able to pull off this transaction. Major congratulations to everybody involved.
And hopefully we keep seeing that for these, commodities and precious metals type products, Kyle.
That's right.
I think it's another category that's taken off. In fact, we saw another one this week, yesterday, SteelCoin, becoming what they say is the first security token on Bitpanda, which is a crypto exchange. So it does make you wonder what licensing or what's regulation is being used to enforce this, given that, we're not aware of any multilateral trading facility licenses or anything like that for an exchange like Bitpanda. But they're using, they say they launched in Austria. So we know, I believe Assetera and several others, have been doing very well using regulation out of that. But specifically, SteelCoin is meant to give investors access to the steel industry. So again, similar to the previous offering, don't quite know the full details that you're going to want to look up yourself. If you're interested, can you get steel products directly? Is it just sort of a derivative of exposure to it? What ultimately is giving you access to the steel market? You should look into. But the asset has a fully diluted market cap of about 100 million euros. So presumably there's quite a bit of, assets behind this thing already. So exciting to see, again, what we're seeing in the sort of the crypto world, to what you just said earlier, Kyle, that, you're going to see more and more crypto companies take advantage and move into RWAs because there is a great long-term value proposition there. But we're also seeing, other products outside of tokenized money market funds for once, also seeing some pretty great activity here.
Yeah, no, it's another really interesting commodities tokenization use case. And you know me, I'm super bullish on commodities tokenization. I've talked to a lot of people that are in the traditional commodities trade that know that this is the future. They just don't know how to take advantage of it. I think that there's so much money that changes hands here internationally. There's so much just capital in this space to justify the advantages here, and it's at such a significant scale. I talk about this a lot. Trafigura, one of the largest companies in the commodity space, they did $238 billion in revenue last year, and they only made about $8 billion in profit. So their margin's like 3%, 4%, something like that on hundreds of billions of dollars. You don't need to save that much more to make a significant impact on that balance sheet. And so I think that these types of solutions make a ton of sense and are really, really exciting for the future of commerce.
No, to jump off of that, Kyle, I think you're going to like this next one too, from Sphinx and Trueflation. They say they're partnering up for RWA perpetuals, but really what this collaboration means is you're going to enable Sphinx to offer tokenized trading for commodities linked to what they say is the electrical vehicle sector, which means lithium and silicon. So they also say it introduces a hedge index that Truflation created to create essentially protection against inflation. So it features a gold, silver, and Bitcoin mix of assets. So a really cool development in terms of
precious metals, if you will.
Yeah, I think across that sector. So commodities, folks, get excited for them. But we are far from done with the activity that happened this week. I think it is also worth mentioning, Kyle, that Ethena, they officially made their choices for their stablecoin reserve fund, right? And this is the trend we're talking about with the demand for money market funds in the first place is foundations, DAOs, stable coins. They all want to be able to tie themselves and de-risk themselves by bringing in real world asset yield, nothing better than, say, a money market fund. So I believe about 40% of it went to BUIDL, with the remainder going to USDM, Sky, and Superstate. So very cool to see Ethena, kind of, again, just like Arbitrum and others leading the charge on this trend. And then we also have a real estate offering, Kyle, that launched in Dubai. Once again, if you think real estate tokenization Dubai, these days you might be thinking estate protocol, and you're correct. So this is, in this case, a Marina property. Again, real estate. So it's its own, asset class that you should do research on, et cetera. But a six-figure property that is, they say aiming to return 9.35%. It's very cool to see more offerings coming to market like this. Anything you wanted to add there? I just got a few more to finish on.
I mean, look, I'm going to call it right now. There's a multi-billion-dollar crypto coin that has to come out. If you're listening to this, please launch this product. It's a stablecoin money market fund aggregator product, like Yearn Finance, but for money market funds. There is absolutely a place for this in the market. You look at Ethena, that's diversifying across these different products, not only from a safety perspective, but because they have all different rates, all different yields, all different terms, all different redemptions. There is absolutely a spread between these different products. And if somebody can create some sort of automated system where somebody can put their treasury in and it is automatically risk weighted across the different products that are greenlit, I think there is a huge opportunity there. But great to see Ethena getting involved. I think this is exactly what these money market funds were hoping for a client like this that's got a big treasury and just wants to park it in stables. Estate, I'm excited for them. I've met their team a few times in a few different countries, which is exciting. Do your own research here. I didn't have a chance to look into the prospectus, but some of the numbers on their site in terms of the rent being paid out versus their expected returns were didn't quite add up in my mind. That doesn't mean that they're obviously misleading at all. It just means double check on where the yields are coming from and make sure that make sure that everything lines up in your mind.
Yeah, absolutely. Moving on, we have a pretty cool update regarding Archax and Assetera that'll be bringing their tokenized Aberdeen and BlackRock money market products to Assetera, which is really cool to see sort of the UK and EU partnership, right? Because Archax is a leader. They're the only ones with an MTF issued out of the UK. But of course, since Brexit and all that good stuff, the UK is not the rest of Europe. So this partnership is potentially going to enable that, full European UK land grab, if you will, or reach using tokenization. So love to see that partnership and see those products continue to expand into different ecosystems, which, as we talked about at the beginning, Kyle, a lot of these products, they're being referred to as just simply treasuries products or money market funds or liquidity funds. But there are similar instruments like commercial paper and repos and other things that are also CDs that are also used in this category. And it looks like ABN AMRO, is proud to say that they tokenize some commercial paper using Clearstream, which is using a private blockchain. but another use case here. And this is part of the European Central Bank trial. So they only did a 1.1 million euro issuance here with this commercial paper with a 1-month maturity. So this is clearly all about testing the technology, identifying the efficiencies. Makes total sense because the European Central Bank is on a roll on a number of trials here. They also did one with the Wirtschafts- und Infrastrukturbank Hessen, aka WI Bank, where they registered a 5 million euro bond on a public blockchain as part of this trial. So again, Europe is really positioning itself, especially you got to give kudos to the ECB for trying all these different types of blockchains and different trials of tokenization use cases. That's going to shape up well for probably in the future. What I would think is some kind of CBDC that capital markets will be able to use in a much more progressive way than possibly we're going to see from private solutions here in the United States. So any comments to end our segment here on this, Kyle?
I think you made some great points, Herwig. I'm aligned on that front, and we'll see the developments from a stablecoin CBDC angle. It's certainly a pretty polarizing topic still.
Well, folks, as you can see, the market is alive. There's so much going on. We had to spend 20, 25 minutes just talking about what happened this week, new offerings, new activity, product updates. It's really great. Let us know in the comments what you thought was the coolest new product offering or announcement to cover this week. But we're not done there. We've got a lot more partnerships and a lot more licenses and fundraising announcements to get into. So Kyle, let's get into the token debrief.
Can't wait.
Whew. Who's ready for another 10 articles? Well, we're not going to try to cover them individually. I think it's too much, Kyle. We're going to cover them in a couple segments here. So Kyle, I'm just going to give you some other quick tokenization updates, and you let me know which one is most interesting to discuss. But I want to kick it off with the fact that Ripple, their Ripple custody platform, has officially added tokenization as well as decentralized exchange features, making sure that the whole thing is regulated for RWAs because they're targeting institutions. And this is, of course, part of Ripple's ultimate plan to, reform into the RWA company to go to, the RWA blockchain with XRPL, which we're seeing a lot of activity on now. They're launching a stable coin. They invested a lot in Open Eden's T-bills. Ripple has a great partnership with Archax. So keep your eye on Ripple as they are continuing to position themselves, which required a lot of technical work to actually update and upgrade and allow for a lot of these RWA tokenization components. We also saw another launch of a blockchain focused on RWAs. There seems to be no shortage of those, this time by Hextrust and Clearpool. We did mention this in the past already, their Ozeon blockchain, and now the launch is real, and you can actually get asset yield through their USDX, I think, or whatever partnership they have going on with that stable coin. So again, more examples of just adoption. There's not going to be a shortage of competition, folks. Brevin Howard, another major asset manager, their digital arm is now saying they're using JPM coin for cross-border payments. So we know Brevin Howard backed Libre. They've tokenized some of their products already. Now they are saying they're going to use cross-border payment solutions from JPM. Maybe that's used for paying investors that are international. I'm not sure exactly the use case. We'll have to dig in. And then last but not least on the tokenization updates, Kyle, we have XAlts, which we've talked about in the past. They are officially integrating Polygon for their RWA cloud tokenization platform. They call that, they're kind of all cloud tokenization platforms, I think. Anyway, that is, big update in terms of them leveraging Polygon for their new RWA stack. So Kyle, any of these that you want to poke apart, dissect, dig into?
Hey, well, look, I mean, the technology is still moving. I think that there's definitely still a lot of lift there. I think that the tech works for very, focused and niche use cases, but it does sometimes seem like we add complexity for complexity's sake, which which may have held back some of the tokenization providers in previous iterations of our industry. And that's why I think it's good that we're bringing in larger financial players. So much of these tokenization deals really are just traditional capital markets plays, and you need the traditional cap markets guys to be aligned on what's going on and then retrofit it with some of the technology. And that's what it seems like we're doing more of today than we were doing 5-7 years ago.
Let's be real. It's the only way that RWAs are going to grow bigger than crypto
right.
is by finally embracing the traditional finance work. So I'm glad to see that. And I think you're right, Kyle. I think it's very hard to point and say, this is what the future looks like. These are going to be the major players. This technology is so novel. There are so many applications and so many ways to build it and use it. And it's really hard to point to even any one product other than maybe Biddle, just on their success of winning allocations, and obviously BlackRock being behind it. But, whether these different walled gardens that are coming from the big institutions, whether you have kind of these open source ecosystems that are going to be competitive, whether they're using public or private blockchains, it's all still going to shake out. And so on that institutional update, we actually have some interesting updates there, Kyle. The Brazilian Central Bank is expanding their CBDC to basically enable capital markets usage. So this is pretty unique in a sense that we have not just a regulator, but the central bank being a proponent for tokenization of RWAs. Not many other countries can say the same. Makes me very bullish on Brazil. We also saw a bank out of Latin America called Lidio that they officially announced a migration from Ethereum to Avalanche for their RWA yield pots. And they say that this is, of course, a more efficient, cost-effective, scalable solution than using Ethereum. And Avalanche has some very popular subnet applications that has financial, RWA tokenization happening on it. And it's become a very popular choice for a lot of other RWA use cases, including the DMV in California, tokenizing driver's licenses and things like that. So it's great to see Avalanche kind of winning over some of those use cases. And it's also worth mentioning that, we talked a lot about the European Central Bank earlier, Kyle. Their one of their officials, Piero Cipollone, hopefully I said that right, Piero, sorry. But he proposes, I think we saw similar out of France, but this time coming from the ECB, proposing a unified European ledger. So again, this concept of having potentially essentially a blockchain and a source of truth that all of Europe could rely on for capital markets is very powerful and a massive lift, and possibly the only way to unite so many different geographies and different rules within the different jurisdictions. So very cool to see a European unified ledger potentially becoming the future of European capital markets. Kyle, any comments on this institutional activity?
Well, it's I think that this is the slowly but suddenly kind of a thing. We've certainly seen how El Salvador has paid off all their debt using the embracing of Bitcoin and cryptos, and it pisses off the IMF, but it works, right? So it is one of those things I think that it's hard not to look at and say, all right, what other opportunities are there that maybe are a little less controversial with respect to the international community, but can still allow us to have more financial freedom, more financial access. And that's where a lot of these firms I think are looking, which is really, really interesting. I know I looked at Macron's comments from France just from a week or two ago saying basically we need to step up our innovation and technology because we're falling behind. There's a lot of this kind of, I think, rhetoric and nuance that's going on across many other countries. And it does seem like financial opportunity is the lowest hanging fruit for a lot of these firms in trying to build independence geopolitically.
Yeah, absolutely. Again, all eyes being on Europe in terms of really being able to potentially offer a very challenging, alternative. I think between Hong Kong, Singapore, and Japan, and maybe Korea, right, you're going to see some great ecosystems evolve. Maybe there's going to be some good interoperability, but the way that Europe is structured and organized, there is a real chance to sort of force this interoperability and standardize a lot of this tokenization infrastructure, which will, of course, inevitably help that ecosystem, I think, grow faster. Which is why it's cool to see some more activity to end the segment here, Kyle, with licenses. Bankhaus Scheichs Tradias out of Germany was awarded by BaFin their trading license for digital assets, and they actually have a Series A to boot on top of that. So good for them. Again, proving that there is excitement here. It's not exactly clear how much was raised in the Series A, but banks raising money for tokenization is always a good thing, but more importantly, getting the licensing they need, which is the opposite of what we're seeing in Europe from Coinbase. Naturally, they obviously have a pretty vested interest in supporting USDC, which has, of course, the right e-money licenses in Europe. And so Coinbase has officially said that by December, any stable coins that are listed on Coinbase that don't have the right European licenses, the e-money licenses, will be delisted. Finally, we see a new ecosystem that every now and then is a blip of life over the past couple of years, but it's great to see licenses being awarded to FCX from the Australian regulators so that the FCX can launch a securities exchange that leverages blockchain and can support RWAs, tokenized RWAs. So definitely would love to see, Australia also start to pop up on the scene as a new venue to take advantage of. But still remain mostly bullish on Europe in terms of what's coming next year for the ecosystem. Kyle, what do you got?
Yeah, it's interesting to see, it's definitely these walled gardens continue to grow, and from the Coinbase delisting stable coins, a lot of these types of things, it'll be very, very interesting to see how open regulators are to competition in these markets, because I do think that competition is a good thing for these types of products. That doesn't mean that we want to have the barrier to entry be zero, right? But at the same time, I'm not sure that that the inverse of that is also the right strategy. So I'll be interested to see how this type of weapon is wielded by regulators with respect to seems like generally power is heavy-handed in how it's dealt. So let's hope that that's not the case here.
Yeah, it is interesting that even the biggest bank heads at Goldman Sachs and JPM and others, who are relying on these private permissioned, types of chains, they've all acknowledged that public blockchains will ultimately be the winner. So it'll be interesting to see what the regulator has to say about that in order to potentially keep their control or allow a flourishing, completely public blockchain-based tokenized economy and capital markets. So we shall see. I'm sure we'll see it play out across the world in different use cases. So we're going to see what ends up working. But to your point earlier, Kyle, El Salvador seems to be doing it very well. That's it. That's it for the show, everybody. That means we have to pick our companies of the week now that we've gone through all the announcements. So Kyle, shall we?
Let's dive right into our final segment. All right, Herwig. See, this is where I take the lead and we get excited because look, there's the Grammys, there's the Emmys, there's the Tonys, there's the Ballon d'Or in soccer. There are the highest levels of achievement and awards across professional services. And then, of course, there's the Company of the Year award, which is nominated by our weekly elections for Company of the Week. These are two businesses, Herwig, that you and I choose that make the most impact on the market. We want to highlight for doing something interesting or getting involved in a meaningful way in the market. And with that, Herwig, I can't wait to hear who your Company of the Week winner is.
Well, with pleasure, Kyle, because we are finally starting to get into the final nominations. We're in Q4 of the year. There aren't too many weeks left, especially with the holidays, typically meaning we miss 1 or 2 weeks. There aren't too many opportunities left to qualify. And unfortunately, I'm not giving it to anybody new this week, Kyle. I have to give my company of the week, which is, of course, my personal choice of Ethena again. I chose them a couple of weeks ago and they started planning a new stable coin and showing that they are looking to innovate and adapt. And now they are again showing the world how it's done. I think every other stable coin is going to start to follow this path where Athena's 46 million in reserves that they invested across a couple different providers. Like, that's a trend we're just going to keep seeing on getting adopted, right? Whether you're a crypto foundation, whether you're a stable coin where, your depegging is the most important possible thing to prevent. And then, of course, whether you're even a DAO or a similar type of crypto initiative, you don't want to be tied to the market bull cycle, bear market cycle. You don't want to be tied to your token's success and having to sell that token, et cetera. So the fact that Ethena is saying, hey, we're now going to put 46 million into basically liquidity products, money market funds, these tokenized treasuries, that's a sign of strength to me. That's what's going to be what separates the crowd in the future. And it's going to be, to me, the obvious solution to creating sustainable crypto organizations, right, that leverage real world asset yield in order to power themselves, in order to make sure that in the event of a black swan event, the whole thing doesn't come crashing down. So whether it comes to stress testing and being able to keep operations going, et cetera, via treasury management, I think Ethena, along some others like Arbitrum that have already led that path, they're showing you how it's done. They're showing you the playbook. So for that reason, I have to give it to Ethena again. You're my company of the week.
Yeah, I think this is a great choice. They're leading by example and really showing how to do proper treasury management while also driving the RWA and security token market forward. So it's a real win-win, I think, for everybody. They get what they want, but then it also helps drive the market forward and helps prove this concept and prove this use case, not only with institutions, but to your point, Herwig, they are a DeFi style of business, and hopefully others will also follow suit, because this is a safe way to custody some of those large treasury assets that so many of these companies have and will continue to have moving forward.
Well, I appreciate that, Kyle. I wonder if our listeners agree. Please let us know in the comments, by the way, if you don't like my choice there. But the good news is maybe you'll like Kyle's because he gets his own. So who's it going to be? Is it State Street? Is it Fidelity? Who else? What do you got for your company of the week, Kyle?
Well, Herwig, I do want to give an honorable mention. Before I mention my actual company of the week, there was an honorable mention, and I really thought about giving it to the SALCO team for pulling off their RWA acquisition. I thought that was really great. They pulled off a transaction. You guys know me. I talk very much about how I like to see the actual money move to give the award, but I just didn't have the ability to dive deeply into exactly what that deal consisted of. So I was a little bit hesitant, but I did want to give an honorable mention to SALCO before talking about my company of the week, Anduro. Anduro is the company that is working with Marathon. They're incubated through this public company, Marathon, one of the largest Bitcoin miners in the world, and they're launching RWA tokenization on the Bitcoin blockchain. They're working with friend of the show, Vertalo, who has been very active and very trustworthy in the space for such a long time. They're super passionate about this stuff. So they're working with the right providers. They've got a ton of money behind them with digital, Marathon Digital, and they're launching RWA solutions using a lot of the resources that they've been able to collect. And so I think for all of those reasons, it's really exciting. And they are actually going to be tokenizing a whiskey barrels fund. So we've seen this one a few times before. Whiskey does appreciate very well over time. It is an interesting investment vehicle. And it seems like there is demand for these types of products from private equities or people that are investing in alternatives. So I think that because they have great backing behind them, they're working with the right providers to help make it happen, which is something that we harp on so much inside of the STG team is a lot of times you get these companies that think they can do it all on their own, and it's really useful to bring in the experts. So they are bringing in great companies to help make that happen, and they're launching RWAs using one of the largest providers of a public company. So I think that for all those reasons, I really got excited about this one, and hopefully that will keep driving the industry forward.
I think that's a great choice, Kyle. I love seeing these full-on infrastructure, plays come together. You've got Marathon powering and bringing a lot of trust to this whole thing. They incubated this blockchain for this case, Anduro, and obviously a little differently than the usual use case. But that blockchain is just one of the pieces for their tokenization platform, Avant, which is powered by Vertalo, allowing for this tokenized whiskey barrel fund to come to market. So seeing that kind of whole thing come together as opposed to in pieces over time is really great to see. And I'm excited for your choice there, Kyle, because I'm excited to see what other RWAs get excited about Avant and the Anduro blockchain per your company of the week there. So again, love to see. As we said earlier, there is no safe bet on who's going to win this thing. So maybe it's Anduro.
Absolutely right. So with that, Herwig, I think that we can close out our show there. I did have one announcement to make. I wanted to shout out Meshi Dolphin again for winning our Happy Tokenizing contest from a couple of months ago. Your book should have either arrived or it is going to arrive within the next couple of days, signed by Herwig and myself. So major shout out to Meshi Dolphin for being the winner of our competition. I wanted to give you another shout out for being a really active and super passionate listener of the show. Thank you for your support.
We're going to have to come up with another contest soon, I think, Kyle, to re-engage and give someone else a chance to win one of our great copies of Blockchain Explained to really dive you through everything you need when it comes to learning about tokenization and blockchain. So with that, that's our show. We'll see you again next Friday, of course. But in the meantime, you can always go to stm.co. We just released a brand new monthly report since we're now well into October. So if you want to see what happened in September from a trading activity view, from what happened in the market, go check out that latest report. And in the meantime, stm.co will have all of everything you're looking for from the charts and trading information and everything else. Once again, please, please, please give us a like, a subscribe, a share. That really helps us grow and keeps us motivated to keep giving you the best possible show every single week. And of course, Kyle, my friend, it's always good to see you. Glad the hurricane didn't hurt Miami too bad. And
I didn't get rain.
Out to the West Coast, Tampa, Sarasota, all the other West Coast of Florida towns that got affected by this. But any closing thoughts, Kyle?
Hey, well, look, thank you for tuning in. Yeah, we're like 5.5 years through this podcast and no signs of stopping. Herwig, it is so much a pleasure to be here with you every week. I thought you did an amazing job this episode and proud to be the co-host here for such a long time.
Well, in case you're wondering why they call me Happy, here's why. Happy tokenizing, everyone.